China, Trump, the Fed. It has been a rough start to the month of August for investors, but our next guest says that anyone looking at market history probably could have already guessed that. Ryan Detrick is the senior market strategist at LPL Financial, and he joins us now. So Ryan, since the crisis, we have seen August be on average the worst month of the year. What do you think's behind that? Is it just bad luck? I mean, we know the old sell in May, go away. Is there just a lot working against this month?
Well, it sure seems that way. You know, we wrote about it a week ago before all this volatility started. The last 10 years, August is the worst month of the year. Now, believe me, some of this could be random. At the same time, these out of the blue events seem to happen in August. 2011, you had the U.S. debt downgrade. August of 2015, the surprise currency devaluation in China. August of 1990, Iraq invades Kuwait. 97, the Asian contagion. 98, long-term capital management. You get the drift. These weird things happen in August, and what also happens in August? Light volume. So things are pretty calm, and if you get a big event, you get a big move. And the last 10 years, really last 10, 20, 50 years, however you slice it, August is not a good one. But the last 10 years, August is the worst month of the year, and sure enough, I know we're bouncing back the last few days, but boy, oh boy, it sure started off rough, didn't it?
Yeah, no joke. We definitely are bouncing back. We're seeing that in trading again today. And today, you know, we have a 52-week high on a Dow component. We haven't had that in a little while. McDonald's, which brings me to the consumer. And just connect the dots for us, what's going on with the consumer, because, you know, the consumer confidence and retail sales numbers have been good recently. Does that make you bullish? Should we be expecting here to see more names like McDonald's trending higher even in August?
Sure. Well, Jen, great point about the consumer. Now, there's a few ways to look at this. I'll take it like this. Like you said, all these headlines about China and the Fed, yeah, what consumer confidence do last month? Really big jump. Retail sales, the consumer apparently, at least U.S. consumer, apparently isn't affected by this yet. Consider the fact that the consumer makes up nearly 70% of GDP. We're aware of all the concerns, slowing economy, slowing global growth, but the consumer is still driving things, and that's the real big positive led by the employment picture. Employment's still really good. What's the biggest thing you can buy, though? A house. Housing stocks, quietly, I think, are doing really good. I mean, housing stocks are one of the best sectors the last couple of months. My opinion, our opinion at LPL Research, you're not going to see housing stocks breaking out to 52-week highs if we're truly on the edge of a recession. And that is the biggest thing you can buy. Housing stocks leading are a really good sign, we think, for the consumer and probably the stock market in the longer term also.
Now, Ryan, you see kind of fair value for the S&P right now around 3,000. We're, 70, 80 handles away from that right now. So let's say we get back to 3,000, right around those record levels we saw not too long ago. What do you think could be a catalyst that sends this market higher? Because now we've seen a couple of record highs this year sort of get rejected by the market. What could sustain a rally towards, let's say 3,500 on the S&P?
Sure. Well, the one thing that we've seen really for 10 years now, right, they're in this 10-year bull market, is how freaked out we all get on pullbacks. Rightfully so. We think, oh boy, here's the next big one. Guys, just this morning, the AAII sentiment poll had the highest number of bears since December of 18 and since February of 16. Think about those two times, not the worst two times to be bullish. People get really worried, and that's kind of, they lowered the expectations. The economy's not nearly as strong as it was last year, yet the stock market's clearly doing better. So if we keep seeing kind of people freaking out, then the underlying fundamentals drive us. And look at yields. I mean, like we said, yields seem to have bottomed here. You look at flows when it comes to bond funds. I mean, people put a lot of money into bond funds. They've done very well. That inner contrarian in us thinks yields have had such a massive move lower. Now they're starting to stabilize. If those can go a little higher, that can create a little confidence also. And then to kind of put a bow on this, financials are such a key. Financials are a big part of value. We like value. I'm aware financials have been hit hard as yields have gone lower. But look at the earnings. Banks have had really, really good earnings. So if financials can kind of take that baton and lead us, those are all some positive factors that can kind of keep this bull market going.
All right, Ryan Detrick, senior market strategist at LPL. Thanks for joining us.